So, hello, and a massive hello to everybody. Hope everybody's having a great weekend wherever you are, whatever you may be doing. This is 50 pips, rocking and rolling, 8th of October, 2018. No trade calls, recommendations, or response for their own stuff. We're here for educational purpose only. So, what's going on? What's going on? What is going on? Well, there are an awful lot of moving parts across the board. So, for those of you who are interested, I posted on the blog. The latest post is a full open access recording to, I think it's Thursday's session of the daily webinars. So if you want to take the time to go through that, it's a 1 hour session. It's fairly long, but I think we cover our thinking and we detail a lot of things we detail them in detail, obviously. So I think that's maybe worth watching if you're interested. Now, what is going to be the focus this week as well? We've got China coming back on holiday after Golden Week. That's going to be very interesting because they missed a little bit of a retracement here in U.S. stocks, the commotion in bonds. So it's going to be very interesting to see how China reacts. Clearly, if you look at breadth on the market, it hasn't been anything too spectacular. But really, if you think that we're going the way we've retraced, we're going into a seasonally bullish period, right, into these midterms. You wouldn't necessarily expect the market to be fall out of bed. Now, with the kind of action we've seen, and we'll look through the charts in a second here, we still would expect that this retracement has a little bit more to go, at least, that we haven't seen the low here. But at the end of the day, it's probably all down to bonds. So we'll have to wait and see. As I said, there are a lot of moving parts. I'm going to try and keep this video not too long as usual. But for the 50 on market subscribers, I'm going to do specific videos to go in detail on the NASDAQ and on crude specifically this week. So those will be two interesting things to look forward to. So we've had this retracement on the equity side, and the short we had on the Russell played out very, very nicely here. As we said, this is very nice asymmetric risk reward here on the trade for the correction back into the 200, and that's done and dusted. And the Russell has been leading, right? We discussed this for a long time. Where is it? There's a chart we're saying, right, that basically Russell tends to lead, and we see it started to break down early, and then we got all the others following. So it's very, very nice. We really can't complain with the action we saw there on the Russell. Now the issue is, how are we going to behave on the other indices? So here, as you can see, essentially, right, and this was from the quad screen from the latest review we said, is here it looks like that Russell was leading, and we were expecting to see a little bit of follow through. And you see here pretty much last week, all 5 days, very, very heavy. Now, if you start to look at some of the moving averages, you'll see here that we're starting to draw up on support, but clearly the action last week was exactly what we were looking for. So going into some of these equities indices in more detail. So we got the NASDAQ here. Now the focus is really how we behave now that we've failed at highs. So don't be surprised to see a rally. The key is that we put in a lower high. No matter what we do, is that we don't get a triple top or something like that, because those tend to break out higher, right? We want to see whatever kind of bounce comes, we want that to have a lower high. And essentially here, as long as this holds, the retest of the 200 is open, just like the just on the Russell. There are a lot of interesting structures here. I'm going to do a specific video to go through the NASDAQ in detail later on in the week. Now on ES, what's interesting on the ES here, what we would watch for is, remember, this was the yearly range, right? And we said as long as we're hovering here, we wouldn't be surprised to see the market chopping around here, not doing much. And the break was very, very bullish. Now, this is going to be absolutely key going into this week, right? What does that mean? We've broken outside of that yearly range, and you see how the 50 DMA has caught this straight away. It's absolutely key to hold the upside Momo. So here, what the bulls are going to be looking for is they really need to get this yearly range breakout to hold early in the week and to see the market start to continue to close above and hold this 50 DMA. As long as this holds, then rally time. The important thing is going to be to see if we make a lower high. If this breaks, similar to what we saw on the Russell, what we saw on the net, we'd expect that 100 DMA to get tested very, very quickly, and ultimately the 200 to come into play too. In terms of YM, this is also very interesting because it's been holding very, very bid. And you see here, essentially, we've just failed at these highs. And if you see the weekly close, right? Not too bullish reversal pattern. As long as this holds, you'd expect that 50 to get tested, which ultimately, which is the 25. Look at this, right into the 25K mark, which essentially means that gives us that 200 DMA on the daily. So you see how these things go back and whack. Now, what's interesting in the action we've seen, and again, that's why also is going to be interesting to see how China opens, is if you look across the world, right? You see what's happening here. We've got this double top, or this top here on the YM, to give you an example, and you see how all the other markets have been trading, right? Whether you're talking about Germany, France, UK, Italy, Hang Seng, Shanghai Comp, they've been very, very heavy, right? So is it time for the US markets to catch up with the rest of the world? That's going to be see this screen. The only thing that's slightly off here on this chart, as you can see, guess what? It's the red one. It's the Nikkei, right? That's where we got that cocaine angel complete ramp, but that failed, right? And that dragged, we've been talking about this in detail, yen higher. But look at how the Nikkei traded towards the end of last week, right? We had this, then we got this silly ramp, and then the failure at highs. We've been talking about this all week. Look at it on the weekly. Look at what this is starting to look like on the monthly. So this is another key piece of the puzzle, because as we said, if this is for real, at the very least, we'd see this test, possibly a move all the way back to test the bottom end of this range, right? Year lows. And if that plays out, that's going to have severe implications for the yen. You see how it's stalled right at that 114 level. And that would mean also for the yen, at least, right, move back down here, call it 112, whatever you want. But if that breaks and US equities start to trade heavy, etc., then what that would lead us to believe is that this descending channel is still in play, and that this was just all one major fake out as equities roll across the world. Now that's a long way away, but we like to always have different scenarios mapped up in the future and see what's happening. So again, as you can see, there are a lot of interesting moving parts across the board that we will discuss. We'll do some more detailed videos, and that we'll look at. In terms of the DXY, as we discussed this, if you're interested in the DXY specifically, again, go through that webinar I posted on the blog, because we discussed this in an awful lot of detail, the bullish and the bearish view, also from a bigger cyclical perspective. But ultimately, this is still much to do about nothing as long as we're kind of stuck in this broader range. We've discussed this a lot every single weekly update too, so I'm not going to go into this one in too more detail. And also, we discussed the bonds in a lot of detail on in that Thursday session, but essentially this is gigantic, right? As long as we keep on holding below this 138 level and we can't close back above, there's a serious risk of a big flush all the way back into the 200 here, and that would bring us back into the 129. It's a very, very ugly move. Now, all things being equal, you would expect the market to try and stabilize a little bit here. Probably the downside isn't done, but you see how it's starting to stall a little bit. So the big test, I think, especially early in the week, is can the bond market stabilize a little bit? Now, if it stabilizes and it starts to bounce, that's the level you want to watch, right? If that gives, then we'd expect to see a very, very sharp, aggressive move. If that gives to the upside, if that still holds, then as long as we keep on getting the daily closes below the 138, the only thing we can say is that there is, there's much more to go to the downside, and we'd be looking at it broadly speaking right now where that level is coming in. That's coming in at the 129, but we think things could get a little bit explosive here, even though the start of the week may be a little bit tame. But keep in mind, bond markets are closed on Monday, by the way. So we'll have to wait and see. But the big thing to keep an eye out for into the start of the week is how the Chinese markets open. But again, don't be surprised if you see some kind of a bounce. All things being equal, especially the Russell is the nicest way to look at it. If you were a betting man or a betting woman, after this kind of move and this reaction of the 200, would you be playing for another 5% move down with absolutely no bounce? Or would you be playing for a little bit of a move higher, even if it has to end up lower, right? Think about it that way. That's the way we like to look at things. Okay, guys, trying to keep these videos to under 15 minutes. Have an awesome one. Thank you for liking. Thank you for sharing it. Again, remember, if you're interested in our detailed thinking, a lot of stuff you can full free access webinars up on the blog. And for the subscribers, I'll be doing some detailed videos, especially on NASDAQ and crude. And as always, you can write in if there's anything special you want me to cover. Take care. Have an awesome one. Bye-bye, guys.